We have third quarter earnings results from Salesforce coming into the newsroom. Let's go through a few of them. Adjusted earnings per share coming in at $3.25 versus $2.41 a year ago. The estimate had been for $2.86, so a big beat for the company there. Revenue coming in at $10.26 billion. That's an 8.6% increase year over year, and slightly below the estimate of $10.28 billion. A number of different revenue metrics also coming in. We'll talk about that in a moment. Let's get to the fourth quarter forecast. Revenue they expect of $11.13 billion to $11.23 billion. The estimate sits at 10.91, Bloomberg consensus. And they see adjusted earnings per share coming in at $3.02 to $3.04. The estimate is in the middle at $3.03. Also a 2026 year forecast. Revenue coming in at $41.45 billion to $41.55 billion. The estimate is on the lower side at $41.25 billion. All right, let's break this down with Patrick Walravens. He's Director of Technology Research at Citizens JMP. Thanks for joining us today.
Thank you for having me, Marilla.
What's the key metric for you here?
I mean, you want to see growth accelerate, right? And so just setting the table a little bit, it's been a brutal year for Salesforce investors. The stock's down nearly 30%. And when I checked just a moment ago before coming on, it was up 5% or so in the aftermarket. And basically what you're seeing is this company has made a massive pivot and investment in a product called Agentforce. And we are finally seeing signs that that is really working. And you were just going through the numbers. You know, the most important one was talking about the revenue guidance for next quarter, where they're talking about 11 to 12% growth next quarter, up from 9% this quarter. So you can see things starting to work and the business starting to accelerate.
Okay, let's talk a little bit about what has dragged shares down this year. I think much of it has to do with the concern that the business model doesn't have a lot of growth if AI bites into that business. Do you see that as a significant threat, or has the company sort of voiced a defense of that?
They've done a nice job responding to it. So the bear case on this entire space has been that AI is going to eat software, AI is going to eat SaaS. And what Mark Benioff has done, and this is one of the advantages of being a founder of a business that you've run for 26 years, is he refocused the entire business on their own AI product, which is called Agentforce. And this quarter, they just told you that Agentforce is now north of a $500 million ARR, which is annualized recurring revenue. So is it north of a $500 million business, and it grew over 300%. So that product is starting to really kick in, and as it becomes a bigger and bigger piece of the pie, it should help accelerate the total revenue growth.
Okay, so he definitely has countered with his own argument, but it doesn't look like investors are buying it. Why do you think that is?
I think they're starting to buy it, right? The aftermarket says they're starting to buy it, but you're right, the stock's really inexpensive. And the issue is that there are so many concerns that models, whether it's from OpenAI or from Google or from Anthropic, are going to replace the kinds of functions that companies like Salesforce and ServiceNow previously did in the enterprise. And I think what we're starting to see is that, in fact, in order for these models to really do the job you want them to do, they need a lot of scaffolding around them, and they need a lot of controls, and they need access to the right data. And companies like Salesforce are really well positioned to provide that scaffolding so the models can be more effective.
Okay, Salesforce also announcing layoffs recently, several hundred jobs. Do you think that is a trend that will continue with this company? It says it's basically gaining from AI efficiency.
Yeah, so yes, but then the second big point in terms of what's happening on this earnings call is they just acquired a company called Informatica, right? So they just increased their headcount by quite a bit because they're bringing all those employees on board. And that deal closed last week. What Informatica does is it has thousands of different connectors to data sources. And when you connect agents to the right data, they can do their job a lot better.
You maintain an outperform for the stock. Is that your continued outlook for the end of the year into 2026?
Yeah, we think the stock can go up a lot. We think this stock can go up to, over $400. It has been really beaten up. And if they continue to show this kind of growth with the Agent Force product, it should be a really nice outcome over the next couple of years.
Okay. I do have to leave it there, but appreciate your time. Patrick Walravens, Director of Technology Research, Citizens JMP. Thanks for joining us.